Yeah. Print it. Print it. Spend it. Who's gonna end it? Print it. Spend it. Nobody gets it. Print it. Spend it. Watch how they bend it. Dollar get thinner. Still they defend it. Yeah. Every press run looking like casino confetti. Whole economy sweating, but they sweat it steady. Every meeting got a smile while the truck getting heavy. Turn a mountain into dust with a stroke of a Chevy. Value evaporate, magic they fabricate. Pass it to taxpayers, call it a balancing act. Borrow tomorrow just to decorate today. Then they auction every future just to finance the play. Middle class women while the top pull away. Everybody buying buckets, but the boat got decay. I don't trust applause from the architect stage. Every chapter feel familiar, only swap out the page. If inflation was a prison, then we all in the cage. Everybody chase a number while they lower the wage. Print it, spin it. Who's gonna end it? Print it, sprint it. Nobody gets it. Print it, spin it. Watch how they bend it. Dollar get thinner, still they defend. Now they whisper wash. Everybody call them different. Same suit, different face. Hope ain't evidence. Maybe he the firefighter, maybe gasoline. Maybe bring the scalpel, maybe guillotine. Every headline feel like poker with invisible tails. Everybody ring the bell while they auction the well. Policy folded in the speeches they can never quite sell. We've been reading footnotes like they scriptures from hell. Cut, pause, pivot, freeze. Whole market speak another language. One word, everybody reposition they exchanges. Trust ain't built because you changed out the driver. Engine still smoking underneath the provider. Maybe he the cure, maybe just another supplier of prettier speeches while the numbers climb higher. I'ma wait before I worship. Watch the actions, not the sermon. History got receipts. I don't care who determines. Print it, spin it. Who's gonna end it? Print it, sprint it. Nobody gets it. Print it, spin it. Watch how they bend it. Dollar get thinner, still they defend. Tick, tick, tick. Whole clock glitch. Whole block rich to the car switch. Brick by brick. Watch the flow lift. Quick profits, long losses. Who crossed this? Paper chase, paper fade, paper mask, paper stage. Everybody playing musical chairs with the dead parade. King wear a crown made of promises. Pawn wear a chain made of consequence. Everybody pointing fingers at the audience. Nobody volunteering for the confidence. Every circle got a pretty slogan. Every rescue leave another lock broken. Every bail I write another blank token. Every promise sound amazing until spoken. So I never buy hope, I buy proof. Never buy smiles, I buy truth. Weather wars change the room, we gon' see. Print it, spin it. Who's gonna end it? Hey, hey. Print it, spin it. Nobody gets it. Hey, hey. Print it, spin it. Watch how they bend it. Dollar get thinner, still they defend it. Print it, spin it. We'll see who's really running this. Print it, 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 this. Print it, print it, this.
Oh brother, oh brother, oh brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where it is a beautiful Tuesday, August the 25th. We're almost at the end of a new month, kicking off September, a mere next week. But between now and then, there's a lot going on. NVIDIA's reporting tomorrow. Apparently, I have to sneeze. PCE tomorrow, Kevin Warsh speaking on Friday. The gamma structure and options positioning is pretty wild. We have some big movement in some of the most classic blue chip tech stocks. Meta looking phenomenal right now in terms of the short-term intraday movement. Some big news on Rumble, Micron Sandisk catching a bid, Bitcoin finally waking up from its year-long slumber. We have a lot going on. A lot going on. And I know I'm a little late today and issues with Streamlabs getting the stream to actually start. So I don't want to spend too much time bantering right now. Let me do my job and prepare you guys for the stock market open. We're going to start from the big view. What's going on globally, the massive macroeconomic moves. And then we're going to kind of really get into some of the nitty gritty of specific ones, such as NVIDIA, what's happening with Bitcoin and some of this other news. So I hope that sounds good to you. I hope you had a really good day yesterday. I hope you made a bunch of money. Maybe not the easiest trading session, but not the most difficult. I very much hope today is setting up for an easier trading session. And maybe you're going to get a little bored of the news. I just want you to know, for those of you who are day traders or something like that, just so you know, the SPY and the Qs, SPX, NDX, are both gapping up right now, which means we have downside gap fills. So I, like you, am feeling bullish right now. I really am. I do favor the bull case, not only because of price momentum, but because of options positioning. And of course, we'll have to wait for the market open to see that ordered flow. Those are the three major things I pay attention to. But from a structural, technical, psychological aspect, please pay attention to the fact that there are downside gap fills, SPY, SPX, QQQ, NDX. There are downside gap fills. So to me, the perfect play would be wait for the gap fill, go long at the gap fill, and then ride it up there. I don't know if the market is going to be giving us that opportunity, but I just wanted to give you a super high level, like, hey, I would love for this to happen. So on that note, let's actually get into the nitty gritty detail here. First of all, shout out to My Funded Futures, a brand new partner with them as of this week. They have daily payouts, end of day drawdown, and a 90-10 split. That is really difficult to beat. In fact, I don't think there's another firm out there that has the combination of end of day drawdown, daily payouts, and a 90-10 split. Some have end of day drawdowns, some of them have daily payouts, and some of the times when they have daily payouts, it's 80-20 or it's some combination. But I don't believe there's a trusted firm out there that has all three: end of day drawdown, daily payouts, and a 90-10 split. So putting those all together, very interesting opportunity. You might be thinking, but Matt, what's the catch? It is a little bit more difficult to pass the eval. Instead of a 40, 50, or 100% consistency, it's a 30% consistency. So at minimum, you're going to be trading for 4 days. Once again, I just want to call that out there. I want to be completely straightforward with you. That's the trade-off. The fact that they have such a good combination of rules when you're funded means that the eval is going to be a little bit more difficult. And the main thing you have to pay attention to there is it's a 30% consistency. So no one individual day can account for more than 30% of your total profit. So basically, when you're on a 50K account, trying to go from 50 to 53 to $3,000 in profit to pass the test, you don't want any individual day to be more than the $900. So for those of you who are interested in daily payouts and end of day drawdown, this is a pretty nice combination. Once again, I get this question a lot of just like, what's the best firm? It's the best firm for you and your strategy. There's obviously firms that are horrible that no one should ever use. But then beyond that, the firm and the rules, well, a lot of the times it's going to be specific to you and how do you want to trade it and take advantage of the rule sets that are best for you and your trading strategy. So for those of you who like end of day drawdown and who like daily payouts, and there's no consistency when funded, obviously check out My Funded Futures, brand new partner with them. Use that code Goonie when checking out and you'll get whatever the best deal is. So on that note, let's switch it up. The SPY, as I already alluded to, a nice gap up. It's up about 0.4% from the close, and obviously it's above the high from yesterday. The Qs are up 0.8%. Finally, tech is finally catching a bid. So not only is it up 0.8% from the closing value yesterday, it's above its own high value, so also gapping up. You could see some of these memory plays getting a nice bid. SanDisk, Micron are obviously up very nicely in pre-market trading. Meta, for a completely different reason, is up, and I actually really like the daily chart technical setup on Meta right now. Gained yesterday, up additional movement today, and then Bitcoin in the recent couple hours, it's coming down off of 80,000, but overall this thing has been on a rocket ship higher and higher. So lots of exciting bullish things to talk about. But before we get into that specific, conversation, let's rewind a little bit to yesterday. The warnings that came before a war now reaching the 6-month mark. After military and diplomatic efforts, President Trump pins his hopes on economic warfare. This is the exact same one that a week or two into it, we were told that we already like practically won and they were on the verge of already like throwing in the white towel and they had the white flag up and they were quitting. And this was the easiest war ever, shortest war ever. We absolutely crushed it. We were promised that it would be like a week, 2 weeks at max, and it definitely would not cost us that much money. And it definitely would not cost us U.S. Members' lives. But here we are, it costing us billions of dollars, it costing us numerous U.S. military members' lives. And there's really no end in sight. So the thing we were basically told time and time again, don't worry about it because it's going to be a short-lived blip on the radar. It's still very much a blip. It's the longest short-lived blip that we've ever probably heard of. So fast forwarding to yesterday, obviously the military front not working that much. So we basically announced Economic D-Day yesterday. So we streamed it. It was not that exciting, but if you want to watch it, it is up there. And basically this was Bessent saying, hey, if there's any world power out there who is helping Iran in the banking sector, helping them do whatever they need to do with money, this is your warning, because if you deal with US dollar, we will cut you off from the US dollar system. Now, beyond that, there's not really many details. There's not really details of when they have to comply by, and there's not really details of exactly what complying is or isn't, like that nitty gritty aspect. Of course, in general, it's like, hey, don't help them with banking. But there's a lot of unknowns to it. So it seems like just another like high level statement of don't help our enemies or you're going to become an enemy of us. Obviously, you don't have to trust me. This is what Bessent said himself.
We are already seeing results. Over the weekend, comments from Iranian leadership clearly acknowledged the effect of this campaign, and nations that facilitate any interactions with the regime should quickly heed our message. Those who stand with the United States will reap the rewards of our partnership. Those who tether themselves to the Iranian regime should expect to share in the isolation of a withering regime. Teams from Treasury, State, and the U.S. military are now meeting with their global counterparts to tell them that the United States expects action. Every country has a defined timeline to shut down activities we have identified. If they do not take action, we will do so unilaterally through Treasury authorities. For example, every branch of Bank Melay must be shuttered and dark. And let me be clear, any entity that facilitates money laundering on behalf of Iran will be removed from the U.S. dollar system. The clock just started ticking. The new sectoral sanctions determinations issued today target 5 of Iran's most vital lifelines that it exploits in other countries: digital assets, technology, gold, aviation, and shipping. These measures broaden secondary sanctions risk for anyone foolish enough to continue conducting business with this regime, and will accelerate the speed with which we pursue them. As I speak, Treasury's Office of Foreign Assets Control is also sanctioning over 60 entities, individuals, and vessels around the world that enable the Iranian regime to procure illicit nuclear and missile technology, conduct cyber operations, and generate oil revenue. This is a sustained campaign to collapse every last option for Iran. Let there be no ambiguity as to the position of the United States. An economic engagement of any kind with this murderous regime will expose those responsible to the full reach of American power.
You get the vibe.
We're already seeing
fancy, little lacking of detail, but the generic sentiment was don't help Iran with banking, and if you do, we're going to have problems. This gets us into a little bit of a pickle there. Bessent launches Operation Economic Outcast to isolate and squeeze Iran. Treasury Secretary announces new measures meant to target Tehran's enablers and cut the regime's remaining economic lifelines. So you're getting the vibe. My favorite part from the interview was it's Economic D-Day, and one of the reporters said, you know, when D-Day actually happened, we didn't announce it. We didn't threaten it. We just did it. So it's not really a D-Day. It's more of like a plea to like kind of do what we want you to do, or maybe something could potentially bad happen. So the reporter Obviously, a little bit of a snarky question, but hey, I'm here for it. It's the internet. Anything goes. But back to the pickle that we're in. What's going on with China? Trump admin unveils anti-Iran global sanctions plan, signals China not exempt. The Trump administration unveiled a plan to isolate Iran's economy by threatening to impose secondary sanctions on the Islamic Republic's enablers. The plan, dubbed Operation Economic Outcast, quickly drew questions about whether the U.S. would go after China, Iran's top trading partner. Remember, they get a lot of oil from them. Treasury Secretary Scott Bessent suggested that China would not be exempt. What? Bessent's Iran threat hinges on U.S. willingness to hit China. Remember, in not so long, President Xi Jinping is supposed to be coming to the U.S. to talk to us about our own trade relationship with them. China defends cooperation with Iran, warns against sanctions. So we're going to say, hey, man, you're specifically not exempt. And China says, don't say that to us. Don't you say that to us. Beijing threatened to retaliate against the U.S. and signaled that it won't back away from the cooperation with Iran after Trump's administration's latest sanctions. The Chinese foreign minister opposes unilateral sanctions and warned they risk worsening conflicts and that the most urgent task is to de-escalate tensions and return to negotiations. China's cooperation with Iran has always been conducted within the international framework and should not be interfered with or undermined. So they say, hey, we want our energy sources, and because of that, we're going to keep trading with Iran and allowing them to bank. So what gives? So it could, in a couple weeks, couple months, cause a bit of issues. I hope it doesn't. Obviously, the market's already been choppy enough, but I just want to put this on your radar to see where maybe the next big story's gonna be. Bessent's mentor, Druckenmiller, calls bond buying a mistake. So I want to share a couple thoughts on this. For those of you who don't know about Bessent, I believe he was running what was referred to as Key Group. I believe that was like his money management firm there, his fund, and he crushed it. There are very few people on this planet who have an expertise the same level of the current Treasury Secretary, Scott Bessent, in terms of interest rates. Like that, he was involved with tilting the pound. He did some crazy things with the yen. This guy within the world of Wall Street, specifically with the emphasis on just currency trades, interest rate trades, Bessent he's one of the guys. Like this guy knows his shit. He's very smart. What's interesting is his mentor, Druckenmiller, is also a guy who knows what's up. Like these are kind of like no fuck around people. They are legends of Wall Street, and many people on Wall Street aspire to get to the level of knowledge, wealth, influence that these gentlemen are at. So when Druckenmiller basically says it's a mistake, he's right. And looking into it, and you can read this article yourself, obviously it was posted on Bloomberg, Bessent also knows it's a mistake. But this is one of those awkward things. We see it a lot with Howard Lutnick, where maybe there's something that they know they should do from a Wall Street economic financial perspective, but because they're in the administration, they have to publicly state other stuff. Bessent is no dummy. I think he's in the awkward position where he knows, because he's no dummy, that he can't really say anything that would seemingly oppose the administration because he's a member of the administration. So he's just kind of going on and saying, okay, this is my talking point, when it's kind of opposite of what's maybe the smart financial decision. Bessent could tap nearly a $1 trillion Treasury General account to fund bond buybacks, according to sources. They were asked this yesterday. He's like, yeah, just so you guys know, the bond market improved, and all I had to say I was going to do it, we didn't actually do it yet. And that's kind of what they're hoping. They're hoping the posturing of the administration will help calm down the bond market. But remember, the bond market, which is exponentially bigger, well, that's not actually true, but is quite a bit larger than the equities market. It's going to react to this, and they're hoping they could calm it down because right now it's under a lot of pressure. So here's the equities market. But before we come back to that, bonds have been getting destroyed. This is really, really bad, especially when you remember that it's quite a bit larger than the equity markets. Bonds are falling precipitously, for your SAT word of the day, while yields are just going up. I always show you the 10-year yield because this is probably the most important to the economy of the U.S. It's most important to individual businesses. But when they're talking about longer dated bonds, they're talking about the 20 and really specifically the 30, which all look like this. Bond prices are going down. You have yield going up, and that is putting a lot, there's it's kind of all a perfect storm. We know that obviously CapEx is going crazy in the world of AI. We know there's a government initiative for infrastructure. We know there's craziness going on with the yen. We haven't spoken about the yen in at least 24 hours. So, there's craziness happening there. We know there's issues with Iran. So all of this is kind of coming together, and it's putting pressure on Bessent to say something that he probably well understands is not going to happen. And obviously, Wall Street is not stupid. They're going to be smelling that out. To this point, prediction market traders doubtful Bessent's bond interventions will push yields lower. So they're betting on it and saying, dude, it's just not going to happen. Treasury Secretary Scott Bessent is trying to claim to calm rising yields. Remember, something is spooking the bond market right now, and we know that something. It's not like the boogeyman. It's not a big surprise. But but prediction market traders don't think his efforts will be that fruitful. Speculators on prediction market platform Kohrs think the 10-year note yield will end 2026 above the current trading levels. Polymarket traders thinks it's likely that the yield has yet to hit its high for the year. They're generally not wrong. They are saying this with confidence. They're putting their money where their mouth is. This is posturing from the administration, and if they really want to pull it off, in my opinion, they're going to have to do something a bit more extreme. Diving into individual companies, we're pretty much done with earnings season. Today, after the market closes, we're going to hear from Zoom for those of you playing ZOOM. But tomorrow is the big one. Tomorrow, we get CrowdStrike, we get Salesforce, and NVIDIA, the biggest company in the world, leading this AI revolution. So the expected move is just north of 5%. So they are expecting a sizable move. And I think from there, we're going to find out, are we generically continuing up in the equities market right here? We had a pop, we pulled back. I think we're going to find out after NVIDIA and also the next day. I'll show that to you in a second. Are we just getting in a higher low continuation, or are we actually going to come back and continue to test this 50 EMA like we previously did? I think all of that will be revealed after the market closes tomorrow. But just so you guys know, on Thursday, we hear from another AI play, Marvel, Irene, and then also Ulta Beauty and Affirm are reporting. I do put this on my Twitter page at the start of every week. This is from me and the team. Shout out to Chaos. So if you guys want this, it's a freebie. Just so you know, it's also in the free weekly newsletter. A lot of these weekly breakdowns, like I said, we give it out for free. So sign up for it, macros.locals.com. It's a free newsletter. You never had to pay for it. You never will. You get a breakdown of the market, cheat sheet for earnings, cheat sheet for the major macroeconomic events. Today, consumer confidence at 10 a.m. Consumer sentiment is going to be on Friday. But the big one this week is Friday, PCE, GDP, durable goods. And then Friday morning, when we get consumer sentiment, Friday of this week, that's when we're going to be hearing from Kevin Warsh at the Jackson Hole Symposium. Anyway, rewinding a little bit to tomorrow, just so you know, NVIDIA has become a banker to the AI boom, putting it in dangerous ground. Growing financial obligations could compound the pain of a downturn. Right now, AI literally is the banker. Like, it is backing so many different companies, so many people. It's putting up money. It's kind of that circular financing. It has equity stakes. So as long as everything's fine, it'll all be super fine. But as soon as there's like, this is starting to turn, it could get really bad. So we're going to be finding out if that's tomorrow. If I had to guess right now, I do think it's going to be a beat, but I am invested in NVIDIA. I don't have an active trade on in NVIDIA. I just want to be clear. But once again, this is going to be the big story of tomorrow. In the meantime, the big story right now is probably Bitcoin. Bitcoin price extends gains as crypto rally gathers pace. Why can I not talk today? Should I just take today off? It's probably because I haven't had my fourth cup of coffee. Honestly, that might be the issue. But anyway, maybe I'll figure it out in real time. Bitcoin surged past the $80,000 mark before falling back as renewed inflows into spot Bitcoin ETFs and improving risk appetite extended the cryptocurrency's recent rally. The latest move extends a sharp rally that began last week when Bitcoin surged more than 20% in 3 days. If you haven't been paying attention to Bitcoin, you're missing out, because try to recover, nope. Try to recover, nope. Try to recover, nope. Fourth time's the charm, absolutely rips and explodes. Now, you might be thinking why. There's a couple moving things. First of all, excitement for the Clarity Act, which is going to be it's already passed the House. It's at a certain committee level in the Senate and supposed to hit the floor in mid-September and be voted on. Why people are excited about the Clarity Act is it's the best way to think of it is a legal framework for kind of everything related to crypto, all these brokerages, who's in control of it, the CFTC or the SEC from there. So it's the legal framework. And people are saying, okay, well, if we have a legal framework, well, then maybe they're going to actually fill up the strategic Bitcoin reserve, which is an effort from the government and really the treasury to sit on some Bitcoin. So that might be another natural buyer. And then people are expanding it out even more of maybe Senator Cynthia Lummis's Bitcoin Act, which would prompt the U.S. government to be an owner of Bitcoin. Maybe this will help it as well. So the Clarity Act in itself isn't the U.S. government buying crypto, but people are making the extrapolation forward that maybe it's going to assist with that with other acts and bills and laws and efforts. And then also the timing of it happens to be right now, September, October, which is expected to be the bottom point of the 4-year cycle. So a couple things all coming together that is really just saying a lot of bullishness for Bitcoin. So right now, looking pretty darn good. But you should know, new Polymarket crypto wallet just bet over $800,000 on the Clarity Act. You don't have to read the article. I already did it for you. That 800K is betting that it will not pass. So I just want to put that on everyone's radar. And with that being said, quickly, we're going to the 1 minute. We're going to the 1 minute. We're going to the 1 minute.
All right. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun.
All right, folks, another fun day in the world's largest casino. Let me make sure I'm on the right chart. Okay, here's a look at the daily. We do have another downside gap fill. It is to yesterday's high. If you're looking on the SPX, there's currently a downside gap fill to 670, a little bit of change. There's another one down to 7610. So downside gap fill, and then there's a slight upside gap fill, which we never actually took out. I'm just realizing that. So one upside gap fill and two downside gap fills within proximity. If you're looking for the SPY equivalent, the downside gap fill would be 765.22, the high from yesterday. If you're looking on the Qs, the downside gap fill would be 709.79, upside gap fill 729.27, downside gap fill 701.59. So there's two downside gap fills within proximity, one upside gap fill on both the SPY and on the Qs. If you're looking at the Russell, there's one upside gap fill and one downside gap fill. If you're looking at Bitcoin, it's ripping. If you're looking at Broadcom, I'm looking for what, like a quintuple bottom right here. I'm hoping it can save itself. If it doesn't save itself, I have to get out of my Broadcom calls. Lam Research, not really doing much. Netflix, you guys know I'm long on that. You know I punted it. You know when I heard that Bill Ackman was getting into it, I bought Elite Play, and thus far it's actually looking pretty decent. I'm up about 2.6K on it. Micron, not doing much. I'm hoping this is just a higher low recovery. Same thing with SanDisk, catching a little bit of a bid. Meta, I'm looking for this to be a triple, quadruple bottom. Really don't mind this as, I mean, this the risk reward of it. Your risk is $30 while your reward is potentially $150. 5-to-1 risk to reward. I kind of like the current bullish setup on Meta. Nvidia, it's right at its 50 MA. We're just waiting for the earnings tomorrow. I think it's a non-play today. Apple, just kind of chilling, trying to hold the 50 MA. It is getting higher lows. I'm looking for the breakout of 320 and a recovery to the upside gap fill at just under 330. Tesla battling it out at the 50 MA. Might be getting rejected. Watching that one closely. Microsoft chilling, going sideways. Rumble continues its trip higher. Now the market is respecting it as a neo hyperscaler play. I love it, exploding from 6 to 979. I'm going to look for that breakout and hold above 1054. SpaceX, not really doing much. AMD trying to recover above the cloud. Palantir holding that nice pop post earnings. Intel trying to put in a higher low, but not looking the best. Amazon trying to catch itself at the 50 EMA and recover after getting an earnings pop to a new all-time high. Looking at Google, not really doing much. TSM, not really doing much. Hut, trying to find a bottom here. Might be a fake out breakdown. I don't mind the risk reward of being bullish here, but you just have to be disciplined to cut it if it does make a fresh low. Marvel reporting after the market closes on Thursday. I like the higher lows. I like the cloud retest and save. I want to see this break 250, 260 and continue. ASML trying to hold itself at the 50 EMA. Salesforce taking a little bit of a breather after a really nice push. Oracle, this is one that Michael Burry is currentently short. It did fail at the 50 EMA on the first test, but it didn't fail by much. Watching that. Texas Roadhouse taking a breather at the all-time high. CoreWeave had a huge hit, huge pop, came all the way back, 50% retracement. Let's see if it can recover and actually go, but this one's wild. Coinbase slightly red after a big pop. MicroStrategy slightly red after a big pop. DJT slightly red after a decent pop. AMC somehow going green. Bonds going up. So we're seeing a little bit of relief in the bond market. Yields coming down a little bit. The question is, how long will it hold? Silver taking a hit, but overall looking bullish. Same thing with gold, taking a slight hit today, but overall looking pretty bullish. Oil right here. Remember, oil CL futures market. This is one of the best barometers for the tensions in the Middle East. And oddly enough, even though we just threatened economic D-Day, the market is telling us, okay, maybe things are calming down. CAS, we're now looking at the shitty penny stock pump and dumps. We called this short out around 7. That got destroyed. TGHL, multiple pops to short. S-Dot, good pop to short. Now we're getting another one. ZBit, same thing. PN, same thing. ADVB, like GEM, this is my Cayman Island play. It's actually up quite a bit today, so I bet that's going to end up being a short. But I bring these to your attention. Just when you see these patterns of like huge pops out of nowhere for random ass penny stocks, it's not going to end well. It's just a question of timing, in my opinion. And I think my opinion is well founded by the actual stats of the market. All right, where are we at? Out of the gate, just so you guys know, I have on no trade at the moment. You can see here I was good. I did not trade any of my accounts. I followed my trading plan as in to not trade. And I'm just kind of waiting for some opportunities. But right now trading on, 5, 10, 15, 18 funded accounts. 5 from Lucid, 5 from Take Profit, 5 from Tradeify, and 3 from MFF. The best one is up $5,000. This was just a standalone account that I did uniquely well on. And then the other ones are all up about 1K. So for the point of this conversation, the Lucids are up too. So the Lucids, I started trading them on a funded account before the other ones, while the other ones I traded like on the exact same day. So they're all up about 1,000, while the Lucids are doing a little bit better. But once again, trading 18 funded accounts. None of these are evals. I should probably buy some evals just to slowly work on them. But just wanted to give you an idea of what we're doing. And similar to yesterday, my goal, personal goal, is to once again kind of just trade in my newer, I suppose it's best defined as a refined strategy. And I'm really, really working on my scaling in and scaling out. For probably most of the time that you guys have seen me trade futures, I've been doing a lot of like all in, all out, or all in and scaling out. And I've known this for a long time. I just haven't had the discipline or the follow through to actually trade on it. But I'm fully well aware of the math of scaling in and scaling out is a much better way to engage in the market. So right now in the short term, to get myself out of my return to streaming slump, for those of you who don't know, I had a new son, a newborn in May. So I took off May, June, and then coming back in June, July, and part of August, my trading has been really, really rough. And I feel like I was just kind of playing behind the 8 ball, trying to quickly make up for that time I missed and try to make that money back. And it caused me to trade in a way that I don't like. And I was just basically like hyper aggressive for absolutely no reason, no real respect for risk management. So I'm trying to like look at my trading journal, really internalize that, and now be better. And when I say be better, it's doing exactly what I just explained. I wanted put a full-fledged effort into properly scaling in, properly scaling out. So just kind of give you guys a breakdown of not only what's happening in the markets, the accounts, but just kind of my own psychology of where I'm at and trying to get back on the proverbial horse. Right now, I'm on a decent streak. As you can see, I had 18 funded accounts. They're all up at least $1,000. The Lucid accounts are even better, so things are going well. And it's funny that things start to go well as soon as you start trading in a reasonable pattern, as in reasonable size, reasonable risk management. It's funny how that works. When you follow reasonable trading rules, all of a sudden you start to see your accounts go up. It's an interesting correlation. I don't know if you guys have seen that. Has anyone in the audience ever recognized that if you trade a reasonable system with a reasonable size and stay disciplined, have you guys noticed that your account goes up? I'm starting to think that there's maybe a causation and not just a correlation with that. I don't know. I don't have enough data on it, but I think I'm on to something. Is anyone else noticing SPX option prices in TV are not working while other symbols are? I've never looked at option prices on TradingView, so I can't comment. Maybe they're just not connected properly or something. Absolutely, yes. I don't know. I don't know if you guys can convince me. Very quickly with Market Open, shout out to MFF. They are the partner of today's show. It is a new partnership. They have end of day drawdown, daily payouts, 90-10 split. That's an awesome. I don't think there's another firm that has the package of those three things together. If you want to take advantage of it, use the code Goonie. But I do want to call out that in the eval stage, the consistency is lower than you're probably expected to. Some of them, like TPT, are 50%. Some of them, like Tradeify, are 40%. This is even lower. So it's going to take you a bit longer, at minimum 4 days of trading, to pass it. But when you do pass it, a little bit more difficult to pass because of the timing. But when you do, that's when you open the door to end of day drawdown, daily payouts, 90-10 split. That's a pretty awesome deal. So if you're okay with going a bit slower on the evals and you're still interested in daily payouts, MFF is something to consider. My funded features, and use that code Goonie for the best deal. And they just kind of rolled out this like rewards card program that I myself, because I've bought so many accounts from them, have a lot of cards to open, and we're going to see what I win, what I didn't win, and we're going to do that on Friday. And ideally, we'll actually try to set them up. If you guys are interested enough in MFF, if you like MFF enough, we'll make them the Payday Friday sponsor, if that's cool with all of you. I started using micros a year ago, and this was my best year yet. Congrats on the baby, man. Congrats to you. Obviously, thank you for the congrats. But yeah, people, time and time again, you hear that. You're like, yeah, no, all of a sudden I started making more profits when I actually sized down. And I think it has something to do with a lot of the rules of prop firms. They kind of give you enough rope to hang yourself, where they're like, like, we'll let you trade all of these NQs for no reason, where you can blow out within like 30 seconds. And it's one of those things that I think a really good just general idea of trading is, whatever size you think you should be trading, maybe just start by cutting that in half. Maybe you're a seasoned trader who's gotten really, really good at risk management, but for all of us mere mortals who still have discipline issues, I think whatever you're about to trade, maybe just start with half of that and see how it goes. Maybe just start with half of that. All right, what do we have here? 8 minutes ago, based on my very good relationship with Kim Jong-un of North Korea, I was not happy with the fact that the U.S. had long ago agreed to participate in joint military exercises with South Korea. These exercises are not only costly, with much of these costs paid by the U.S. as usual, but send a signal that totally inappropriate and hostile to a country that, as long as Donald J. Trump has been president, has been unthreatening and respectful. Therefore, based on the fact that it was too late to cancel, I instructed the Secretary of War, Pete Hegseth, to substantially reduce the joint military exercises. While somewhat was unrelated, I recently asked the president of South Korea if they would like to join us in the denuclearization of the Islamic Republic of Iran, and he said, no thanks. Thank you for your attention on this matter, President Donald J. Trump. Dude, all right, we're already popping off today. We're already popping off. It's going to be a big one. It's going to be a good day. You can feel it. You can feel it, kids. 1 minute trying to push bullish, 5 minute trying to push bullish, 10 minute trying to safe itself being bullish, 30 minute is clearly bullish. Looking at NQ, 1 minute trying to push bullish, 5 minute trying to push bullish, 10 minute trying to save itself, 30 minute is bullish. Right now, price momentum across ES and NQ. ES is for the S&P 500, NQ is for the Nasdaq. It's on the futures market. That's exactly what you trade MFF on. 1 minute, we're trying to switch things up. So I like price momentum. What is options flow looking like? Remember, for me, I like to look at price momentum, options positioning, options flow, and key levels on the day, support and resistance. So the SPY popped out of the gate, now kind of going a little flat. The Mag 7, it is grinding up, favoring the bulls, and looking at the Nasdaq, kind of flat, took a hit, but now turning up. So a little, I mean, it's neutral leaning bullish. I like the Mag 7. I like this look on the Mag 7. I like it. I like it. I like it. A lot of you are saying SPX options are down. SPX options. Let's see. What are these SPX option contracts? Something is broken. So there are people on Twitter saying the same thing here. The SPX options plumbing is broken. So it might be just something with what's it, the SIBO? Who runs SPX? Yeah, but that's all right. You could just use the SPY. It's the same thing. SPX is the actual index, while SPY or VOO are ETFs created to track said index. So you don't have to freak out. I guess the important difference is that some are American, some are European. So if you're trying to hold it to close, you could get margin called on SPY. Well, probably not going to happen with SPX because SPY is asset settled. You actually have to switch over the shares, while SPX is cash settled. So important to know. What the hell is this? What is Tradeify Forge? Oh, the 300K account. The 300K account. The United States is giving serious consideration to changing the name of Lake Ontario to Lake America, in that we don't expect to doing much business with Ontario any longer. Thank you for your attention on this matter. No more Lake Ontario. No more Lake Ontario. Saving Epstein clients, Jesus. Breaking: SEC subpoenas major Wall Street banks over their dealings with Leopold Ashbrenner's situational awareness. When you tell women murdering your own children is a crime, this Clancy case, what's her name? Lindsay Clancy, is getting, it's actually insane. The amount of videos I am seeing that are like, oh my God, she didn't do it, she's innocent. It's a sad state of affairs that people have such an incredible lack of thought, any critical thought whatsoever. I mean, I'm seeing things on Twitter of people like breakups happening because of it. I'm seeing boyfriends be like, yeah, no, this is like over. It's actually nuts. It's actually truly nuts to see somehow people are attempting to defend like 3 children. Their lives were taken. They were straight up murdered, like straight up murdered. And people are like, you know, she was sad. She was sad. I understand you can argue that the system failed her. I get that. That's a very fair argument. That doesn't excuse murder. Just because you were having a bad day and your boss yelled at you, that doesn't give you the right to like bash someone's skull in. Like, imagine if we applied that logic to everything in this world of like, no, like she was just like not in your right mind. No one's in the right mind when they're having a good day. No one's probably in their right mind when they are committing a horrific act. Imagine if we use that with any of these other like super, I guess, viral cases. I'm trying to think of one. The one that's popped into my mind is like George Floyd. Imagine if that was the defense for the police officer. For like, no, he was just having a bad day. Like you can't be mad at the officer who killed George Floyd. He was having a bad day. He was angry, and the system failed him. The system, his boss made him angry. That's not acceptable. Notice how it doesn't apply. Like, I get it. You can feel for people, and I don't think the system should be failing people. And I do believe that the medical hospitalization apparatus, I do believe it failed her, but that's also not an excuse. That's not an excuse whatsoever. Should we be better at helping all sorts of people, not just postpartum moms? Of course we should. We should be better. But just because we should be better, that doesn't excuse other acts. This idea of like pleading it. I don't think you should be able to plead insanity. I think that's the dumbest potential defense ever. Whatever. Okay, if you are so insane that you committed a horrific crime, you should be locked up anyway. I just don't get it. Killing defenseless people is disgusting. Yeah, you're starting to get my point. You're starting to understand my point. Did you see the Spencer Pratt response? I didn't. I don't know who Spencer Pratt is. Maybe it's good, maybe it's bad. Just haven't seen it. The Q's just pumped intraday high. SPY's 50% of its range. Micron Pop gave some back. Where's Meta today? Meta popped, kind of going flat. Netflix is climbing. Dude, I feel like I might have crushed that play. Lamb Research. I need more green. NVIDIA. Okay, so Netflix and NVIDIA are having good pushes out of the gate, probably helping the NASDAQ push even higher. 1 minute keeps getting rejected on ES while we broke out on the NQ. So I want to see I need the 1 and the 5 to break on ES. The 10-minute is trying to save itself, so it is at support. It's not the craziest thing, but I would love for it to get above and hold above basically 7,700 on ES. Looking at NQ, it popped, 5-minute pop, 10-minute pop. So the NASDAQ switching up course is kind of actually being the stronger one. Remember, there are still downside gap fills. SPY has a downside gap fill to 76522. QQQ has a downside gap fill to 709.79. Netflix is looking good. NVIDIA is looking good. What is my Netflix position? Oh, I'm up 5.4K. I'm up about 45% on my Netflix play. Not bad at all. Not bad at all. I'll take it. Tesla, I'm not the biggest fan of Tesla right now as an active bullish trade because it actually hasn't broken out. What I would want to see for me to get into Tesla, rather than just chasing it right now. So there's an upside gap fill to 373. What I would want to see for me to rip calls on Tesla is hit that upside gap fill. I would want a momentary rejection. I want to see a higher low be put in, like see how we're slowly getting these higher lows. I want to see another higher low at roughly the 50 EMA, and then I want to see it curl up. I would want to get in on that curl up and then play it from there. So for me, it's just too early. If you're playing it now, I wish you the best of luck. Hey, I hope it just rockets and I don't even have the opportunity to get in. But for me, just the risk reward right now to play it, the reward is 372. We're trading at 352. And what's my risk? 315? What's it? 300? The risk reward, the way I would play it, is just not favorable at the moment. So I would just wait for the upside gap fill, the rejection, a higher low, and then I would play off that. So I can use that higher low and the gap fill kind of as my setup. And obviously the recent low would be my risk. And then I could play it from there and try to target at least 390, 400, something like that. So for me, it's just a non-play right now. I don't want to bet against it. I guess you could on the breakdown of 346 if you're okay risking 366, if you're okay risking like 375, but I would want to do a bullish play. It's just I don't see the bullish setup right now. Apparently Trump tweeted again. Dude, this guy's got some hot fingers. Canada has been ripping off the U.S. for decades. They have been charging our farmers 400% tariffs and more. They have been driving many wonderful U.S. companies out of business for 10 years. They wouldn't certify Gulfstream jets until I got involved. They wanted 100% of the market for Gulfstream's Canadian competitor. I deal with many countries, and Canada is easily the most difficult and unreasonable. They feel entitled, but they are not a state, and they will be entitled no longer. Really? More unreasonable than Iran? Really? We're calling that more unreasonable? Is this true? Is this, we need to fact check this. Can I get a fact check? Aisle 4. We need a fact check. We need a fact check here. Fact check, fact checked. So I said, is this true? Canada has been ripping off the USA for decades. They've been charging our farmers 400% tariffs or more. The claim mixes a real issue with a misleading generalization. I'm checking the actual Canadian tariff schedule in the US-Canada trade rules so I can separate what's true from what's exaggerated. Of course, the truth is always somewhere in the middle. It's always somewhere in the middle. So a classic Trump, mixing real claims with something that's a bit more hyperbolic. Not as stated, there's a real Canadian trade barrier behind the claim, but saying Canada has been charging U.S. farmers 400% tariffs broadly for decades is misleading. Canada does have extremely high tariffs on certain agricultural products, especially dairy, when imports exceed negotiated quota levels. For example, Canada's official 2026 tariff schedule lists over quota rates at 241% on some milk, 293% on some high-fat milk cream, 300% on butter, 245% on many cheeses. The U.S. Trade Representative itself describes Canada's system as imposing prohibitively high tariffs, citing roughly 245% on cheese and 298% on butter. But it seems like that comes into effect after a certain quota. So it's not from the first stick of butter, it's later. Canada charges American farmers 400% tariffs, not an accurate description of the stated published rates. I'm not seeing a normal Canadian dairy tariff of 400%. The strongest factual version of Trump's argument would be Canada maintains a highly protectionist dairy system that can impose tariffs of roughly 200 to 300% on U.S. dairy imports above agreed quotas. And I feel like that's an important aspect. The criticism is legitimate. The 400% on our farmers exaggerates how broadly those tariffs apply. So there's a little aspect of truth, but once again, it's being sensationalized by the president, which in another sense would be called lying, but no one really wants to have that conversation. It's just how he talks. It's literally just how he talks. Why do we care about the truth? It's how we talk. So we all know it. It's like, oh, so it's called lying. When you're intentionally stating something that you know is not truth, it's lying. That's what we teach children is lying. But not everyone sees it that way. Not everyone sees it that way. AI is program gatekeeper. I call chat out the street over the economy. I don't know what that means. The quota levels are fairly low on those items. Oh, yeah, I can see that. And I think even I agree with that. So I think a more fair statement is the quotas are unfair. And when we breach the quotas, the percentages are 2 to 3. But the conversation, he didn't say anything about quotas, so it's misleading. And there's no such thing as 400%. 400% was seemingly made up. Maybe it was a typo. Maybe it was meant to be 300%. If it was a typo and it was meant to be 300, he's getting closer to accuracy. But once again, it's a very nuanced discussion. It's not just 300% from the get-go. It's after certain quotas. And then we could sit there and argue, are the quotas fair? Are they not fair? But my argument is that that wasn't discussed at all. Yeah, Wisconsin is funny to little Canada. Not funny either. Side eyes Canada. Lying, it just says they have extremely high tariffs on dairy products. The lie is 400%. I mean, I'm happy to be disproven, but find me right here. They have been charging our farmers 400% tariffs or more. That's a lie. Like, maybe I'm wrong. Disprove me. I have highlighted the lie. They have been charging our farmers 400% tariffs and more. That I'm highlighting the lie. I could not be more clear about this. The sentence is highlighted on the screen. I am happy to be disproven. Show me, tell me what to search, the article to find. Show me something that proves this is a truthful statement. And I'll happily say, hey, man, that is truthful. Like that's all I'm asking for. The highlighted sentence, they have been charging our farmers 400% tariffs or more. Find me an example of 400% or more. You will be killed if you look into the maple syrup cartel. Even ChatGPT is an unsafe topic. Try another. Joking. So we should get into maple syrup. They carry a standard overquota baseline 295, but depending on the exact fat content and customs classification, secondary fees can push the total cost above 400%. So you're saying it's in a very, very unique circumstance of a type of butter with a certain fat content. I believe this, but spending on the exact fat content and custom classifications. So it sounds like, when global whey prices dropped, they added flat dollar rate spikes at effective rate on 400%. Okay, so then it just sounds extremely misleading. It sounds it can be true in one hyper-specific nuanced case, but do you guys not see how this overall statement makes it seem like that's just the general case? Like, I would say it's a flat-out lie or it's intentionally misleading. Trump is not dumb. He knows what he's doing. He knows exactly how to talk to his base. He knows exactly how to get the market and people to react to him. He's, in fact, very, very good at it. So he's not a dumb person, and to assume he's dumb, you're making, yes, very specific ingredients, not very common to hit 400%. So like I said, he's either intentionally lying, and in this case, it seems like he's intentionally avoiding, like he's stating something that is hyper specific and applying it to a generalized thing. So someone who reads it is going to assume it. Correct. Talks like all other politicians. Oh, for sure. I'm not saying this is uniquely him. This is how politicians do things. Politicians pick like one little detail, contort it, and then restate it, and then send that through the telephone game and just try to rip it from there. And I hate it. Not like for me to be, I suppose, intellectually honest, I think it's incredibly inappropriate when Trump does it, but I also think it's incredibly inappropriate when any president does it. I think it's incredibly inappropriate when any elected congressperson does it. I guess I don't want you guys to think that I'm bashing Trump. Technically, I am bashing Trump, but I would bash anyone who does it. Every president ever has done this. Every politician ever has done this. And it is equally inappropriate when every single one does it. And what's crazy about that is like when you start to make statements like that, people, obviously, you probably just interpreted as me hating on Trump. And you're like, yeah, Trump's such a piece of shit. But I just want you to be clear that I think they're all pieces of shit. Like when Biden does it, or whoever you voted for on your side of the aisle does it, they're also a piece of shit. So I want to be very, very clear. I'm not supporting any of them. I kind of equally hate all of them at a very extreme high level, because I think I'm at the point in my life where I've had no clear evidence that people are just not going into politics for some sort of abuse of power or self-aggrandizing, or they're lining their own pockets. I'm at a current stage in my life where I think all politicians, and I want to be very clear on this, left, right, and in the middle, I'm at a point in my life where I think they are all complete fucking scumbags, and they are either trying to enrich their own family, they're trying to gain personal power, or they're just so incredibly inept and stupid that they are ripping apart the fabric of society around them. So don't take that as just hey, I'm just hating on one of them. I actually legitimately hate all of them. I think it would be very difficult for me to find a politician that I don't like vehemently believe is a piece of shit. That's where I'm at. That's where I'm at with it. All garbage. All of them are fucking useless. We're about to get a little bit of a data drop at 10 a.m. Maybe we'll get the old 10 a.m. reversal. Consumer confidence, I believe. It's either consumer confidence or consumer sentiment is coming out. ChatGPT lists 11 products that are charged around 250% or more after imports amounts are exceeded. Yeah, but that's not 400. You guys are not thinking about the world, I guess, in the way that I do in terms of like just, I suppose, computer science, where it's just like, is this statement truthful or not? I don't like the point of rounding up or rounding down is useless to me. Except Mindani. Nope. Also a horrible piece of shit. He's ruining New York. He like is cosplaying as some sort of like economic expert trying to get socialism to work, and he's wrong. He's going to cost people jobs. He's going to cause rent to skyrocket more than it already has in New York. This whole democratic socialist movement is, it's only beloved and supported by actual retards. Anytime you hear democratic socialists, you should just instantaneously think, oh, a person who doesn't know fucking anything that they're talking about. Matt, we all know you secretly have a Memdani body pillow. Don't pretend. I do. I do. All right. Give us
Good
Rick.
Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Leslie Picker, David Faber here at Post 9 of the New York Stock Exchange. Sarah Eisen's off today. Stocks moderately higher this morning. Oil is lower as investors monitor.
Someone just said, how is he ruining New York? I don't know. Higher taxes, more crime, more homelessness, actively fighting the people running businesses. He's taking jobs. He's screwing over the housing sector. You have to be stupid to not understand it.
Names in the shipping and freight world seeing some big moves this week after the escalating trade war with Canada.
Give us that is the fattest face ever.
Economic data just crossing Rick Santelli has.
All right, here we go. Here's our boy Rick.
Yes, good morning, David. Conference Board Consumer Confidence, month of August. Expecting a headline number slightly over 90, a miss here, 89.4, and this follows a slightly revised 90.2. So less than expectations, sequentially, obviously less than our last look. 89.4 would be the least since January, 89.0, second weakest of the year. Present situation, well, this is the bright spot. 121.2, significantly higher than expectations, significantly higher than a slight revision of 114.4 in the rearview mirror, and that would be the best overall performance since April, where over 124. And finally, on expectations or what lies ahead, this one very similar to the headline. Comes in deficient, 68.2, looking for a number over 74. 68.2 would be the lightest going back to, wow, you have to go back a ways. 68.2 would be the lightest since January when it was 67.2, so second weakest of the year, sequentially lower than 74.0. And very quickly, Richmond Fed for August comes in light at 4. And if we look at the business side or the service side, well under expectations at -12. That would be the weakest level of the year going all the way back to November. But manufacturing being positive just adds another positive anecdotal brick into the wall of recovery in manufacturing. We still have more data. Yes, we have our July read on new home sales. And for that, we go to Diana Olick. Diana?
Rick, 607,000 new home sales in July, seasonally adjusted annualized rate. That's a miss. The street was looking for 615. On the other hand, though, June's number was revised up from 628,000 to 678,000. So we're down 10.5% month to month and down 6.3% year over year. Inventory is rising. In July, it was 488,000. This is 1.9% above June and 1.6% year over year higher. And that represents a 9.6 month supply at the current sales pace, which is high. 6 is considered a balanced market.
We're almost going to get the downside
Median sale
gap,
price
Phil.
of a newly sold home in July was $393,800. This is 2.3% below June and is 0.9% down year over year. Now, this count is based on signed contracts. So it's people out shopping in July. And that's when mortgage rates were in the higher range, stubbornly high. Also, economic uncertainty. The builders had been trying to lower prices a little bit, but you see, they didn't do it by a lot. They are still buying down some mortgage interest rates, but not quite as much. The incentives are still strong, but they're just not getting the buyers in the door. And you see it in these numbers. It's a tough month in July. It's summer. But again, you do see these higher mortgage rates weighing on the new home sales, down quite substantially month to month and year over year. Back to you guys.
Yeah, the real impact of the higher yields we've been talking about. Diana, thank you. Now to the latest in Iran as oil prices fall following the Trump administration's move to isolate Iran's economy through new sanctions.
We haven't gotten the gap filled yet.
Has
We're
the latest
very
from
close.
Washington.
It just has not hit.
Leslie, good morning. So Treasury Secretary Scott Bessent's economic D-Day measures landing a little bit softly yesterday, something of a muted reaction after it was made clear that while Bessent was laying the groundwork for sweeping sanctions on any country doing business with Iran, he wasn't actually taking action just yet.
Puking.
Now, Bessent said that was by design. He said the U.S. was giving everyone the opportunity to remedy bad behavior, but that he didn't want, in his words, to blow up the global financial system. Now, the primary target for any U.S. secondary sanctions is China, by far Iran's largest trading partner. And after Bessent pledged that no one was above the reach of U.S. sanctions, Beijing responded overnight, a Chinese Foreign Ministry spokesperson saying that China's cooperation with Iran should not be disrupted and that China will do everything necessary to firmly safeguard its rights and interests. So essentially, Bessent fired a warning shot here. Beijing then fired one right back. And for President Trump and for this administration, they're a little bit hamstrung here. There's a massive trade relationship at stake between the U.S. and China, and Beijing could inflict real economic pain on the U.S. if it moved to hike tariffs or to cut off the critical minerals supply, just to name two examples. President Trump has also been very focused on maintaining a strong relationship with President Xi and making Xi's visit to the White House, planned for next month, a success. But all of that said, China bought about 90% of Iran's oil before the war. So it's really difficult to choke off funding to Iran without truly targeting Beijing. Guys.
Which we're not doing, I guess, is fair to say. Correct? Is that the conclusion at this point?
At this point, at least not yet. I mean, Bessent was clear no one's above these sanctions. He said Chinese banks would be targeted if they were found to be facilitating Iran's oil sales and any of that, but he's not doing it. And the question is still out there of just how far the U.S. is willing to go to actually crack down on China. Bessent talked about talking with other countries, saying there were timelines in place, there were going to be deadlines, but he wouldn't give specifics. China also, when CNBC asked in Beijing today, wouldn't give specifics on any timeline or deadline they've gotten from the Trump administration. So it leaves it in limbo, and it suggests that the Trump administration, at least for now, is holding back on taking that firmer next step.
Megan, thank you. Megan Casello. Let's talk a bit about the markets here with Partners Group Chief Investment Strategist Anastasia Amorosa. Good to have you here at Post 9.
Good to see you, David.
One day, the market seems a bit negative on the overall AI ecosystem, particularly the chip stocks, data center opposition. And then the next day, we start to see a bit of a rebound. I don't know. Give me a little bit of a longer-term take here.
Right. Well, the longer term take, actually, maybe first of all, the near term take. I think the reason why the market is really struggling, or the semiconductors struggling to perform, even though the fundamentals are so solid, is because a lot is priced in, David. If you look at the earnings revisions, for example, for semiconductor stocks, they're now forecasting 110% year-over-year earnings growth in 2027. So yes, the market knows that average selling prices will likely not peak until sometime next year, and the revenues are going to continue to be strong. But guess what? That's exactly why those stocks have rallied. That's exactly what's already in the numbers. And so, and the valuations, they have declined somewhat. But if you look at the multiple for semiconductors, I think 19 times today, which is well above the average that we saw before the launch of ChatGPT. So that's the near-term struggle. Good backdrop, but a lot is priced in. Longer term, David, I do think it's about a couple of things. It's about the commoditization, a lot of those LLMs. It's the open weight, the open source that are going to compete with all the other ones. And I think the cheapest models will find a lot of use in a lot of applications. And it's possible that those cheapest models are not going to need the most advanced chips. So that's kind of the longer term story. So that's why investors, I think, have to think about what the stack ranking is of the true beneficiaries of AI. You know, maybe near term it's semiconductors, but longer term it's what do you actually do with AI in your portfolio companies? And I think that is actually not priced in. The EBITDA uplift, the margin uplift, that is yet to be priced in.
Yeah, well, it's not priced in part because it's very hard to see.
All right, we don't need that. That's a little distracting. We have a bit more distance to go on QQQ. There's no gap fill on NQ, just so you guys know. There's no gap on the futures market, and that commonly happens because the NQ trading hours are different than NDX and are different than QQQ. That's the major difference. Well, that's not true. One of the major differences between NDX, the index, between QQQ, the ETF, and NQ, the futures contract. They're all tracking the NASDAQ 100. One of the big differences is the time frame of which they trade. So NDX trades just 9:30 to 4 p.m. The QQQ's ETF, but has extended trading hours, while NQ trades the Globex session, which trades from 6 p.m. the night before to 5 p.m. the current day, and it does take off the weekend. So it trades the Globex session, which is 23 hours out of the day. So that's why sometimes you see a gap in the Qs, like we see right now, where there's a downside gap fill, a little bit more 709.79, which you do not see. Like if you look at the 10-minute on NQ, there's no gap in this zone. There's no gap. If you're looking for like a rough equivalent level, you could just look at the high from yesterday, which we still have not hit that. We went as low as 244, and the high from yesterday was 243. So if you're just looking at like roughly, and once again, that's rough, like you're within a couple points, but it's not going to always be like exactly to the cent aligned. So I think there's going to be a lot of people paying attention to maybe 243. We did bounce at 244, but I would feel much better about trying to take this long had we broken 710, because there's about 21 more cents of meat on the bone there for the Qs. I'd feel much better personally. And maybe this is your trading style, maybe it's not. But if you're trying to play this like VWAP recovery or something like that, I would feel better if the charts were quote unquote cleaned up and we took care of this gap fill, because like there's just a little bit more to go. You can see this is the daily chart. You can see the bottom of today's wick did not quite hit it. We hit 710 flat. There's 20 more 1 cents. Like there's this gap still in the chart. Maybe I'll zoom in on Hans right there. You can see that gap that we're still dealing with. That did exist today on SPY and on SPX, but we hit it. See how the wick came down below the high from yesterday? So we got it on SPY. Same thing on SPX. See how at one point we were up here, but see how the wick came just below the high from yesterday? So now it just exists on the Qs in terms of the one that we're talking about. And I do think that's going to hit here. I do think that's going to hit. The question is it worthwhile to play? Which way? There's a big gamma support on SPX at 665 down here. Interesting. SPX is still getting hit. Mag 7 did pop getting hit. Oh, do I want to play this little leftover amount of the gap fill? Because my risk would just be this recent swing high or maybe a little bit above that. I'm trying to think just out loud of like, if this touch fails, do I want to play it? Has a little bit more distance to go. A little bit more distance to go. It doesn't have to fill. Remember, there's no rule. We're just playing the odds that it does commonly fill. But it's not like it's forced that they do that. Mag 7 was looking good until about 947. NASDAQ, same thing, good until about 947. S&P 500, same thing. Everything kind of turned at 947, and the fact that we're seeing a pretty perfect linear sell-off, and I'm looking at the options flow specifically, and the S&P 500, Mag 7, and even the NASDAQ at 947, that tells me that it's some sort of sell program or roll program that someone out there with serious size is running, because this is like, it's the exact same time. It's pretty perfect. There's not really much relief. I think what we're experiencing is a pretty evident program running. I mean, it's just too perfect, in my opinion, to be a human. It's a little too perfect to be a human, if you ask me. A little too perfect. So maybe we'll just wait and see how it actually plays out. But once again, if you're playing the downside gap fill, SPY, it has hit. SPX, it has hit. The Qs, it has not hit. The Qs, it has not hit. Do I want to play this? What time is it? It is 10:14. Oh, do SPX Mag 7.
Order filled.
All right. We're going in for a scalp on this one.
Order filled.
Oh, I hit it. Okay. Hey, that worked. I mean, I took it. It was like a quick scalp because it could just bounce off the gap fill, which did that actually even hit on the Qs? We got really, really close. I didn't want to be overly greedy on this one because we hit 44. We were off by a point. The NQ high from yesterday was 43. I was actually kind of reaching a little bit. I went for the 40. So it was a quick one. $100. Hey, $100 is $100 across 18 accounts. That's 1.8K. Is it the best trade ever? No, I've made more money in a trade, but I think the setup was there. I'm trading with trend. I see what's going on with options flow. We're talking about the downside gap fill. And the reason I don't want to be greedy and overstay my welcome is because we've seen it before where you touch the gap fill and it just rockets off of that. Of course, it could collapse. I'm not here saying it has to rocket. I'm just saying if I could get in, we get into the region of the gap fill and I'm guaranteed money, just take the money. Like, hey, cool. Now I have an extra 100-point buffer that I'm allowed to work with. Of course, it could collapse. And maybe that trade I should have held forever. Maybe. I don't fucking know. And no one knows. No one knows if buyers are going to step in at that gap fill or if sellers are going to put their foot on the throttle. You just don't know. So for me, especially because my risk reward was a little bit skewed, when I just got that and look at that, we're maybe bouncing off 37. Like, I don't mind that at all. I don't, on that play, the chance of a reversal right in that region, it'd be one thing if I had a short earlier today and I gave it a little bit of room, but based on where my trade was actually entered on this breakdown, I mean, my risk, like I said, it was negative risk reward and I saw it right at a key level. I deeply believe I executed that exactly how I should have executed it. Just I did a half size trade, once again, negative risk reward, and I got out right where maybe buyers could have stepped in. And even though it technically hit the high of yesterday on NQ, there was a couple more cents to go. We got as low as 709.86, so there was about 7 cents more on the Qs. But sometimes that little decision right there, maybe there's a quick little flush or maybe not, and then you go. It's just, I did not want to take the risk of this being the exact low of the day, this sell program stopping. I mean, it looks like it's slowing down. There's a clear sell program hitting the market as we speak. It's clear as fucking day. It's going to end at some point. And who knows? We only might be in the first inning and the selling could get worse. I'm fully admitting you it could get worse. But putting together the fact I just, the positioning on it was a little sketchy. And I deeply believe that I had, given the risk reward and the fact that I was seeing reward, I'm happy with how I played it. Very happy with how I played it because now that we just got the downside gap fill, this thing could rocket from here. If the sell program stops, which I know is a big if, but look at this. We're at the gamma flip level and we're coming up to support on SPX. There's so many things telling me that if you're short, this is a time to either take all of your profits or a good portion of your profits and get the rest of your position to break even. We ran out of negative gamma. We're going into positive gamma. I'm seeing signs of the option sell program starting to stop. It might keep going, but I'm seeing signs. And then obviously it's just a gap fill. We hit the gap fill. I don't know how else to try to break down all the things that I'm considering, but to be greedy with your short past this level only makes sense if you've already locked in some and you have your stop to break even. But if you're like, no, I'm just ripping full position and I'm still carrying risk when we're running into support, you're just playing a dangerous game. Of course, support might break. Support doesn't always hold. But I just want to, I guess, articulate that you are playing a very, very dangerous game. A very dangerous game. That's 30 minutes even bouncing, 30 minutes maybe potentially bouncing. Do I want to take a stab at this? 56, that's not bad at all. I could go half size. Do I want to see maybe a little bit more life? I'm just thinking about maybe buying off the gap fill. Maybe buying off the gap fill. I'm looking, the 30-minute just kissed it at 250. That even got the bounce off the high from yesterday. It's not the craziest trade. It really isn't. Oh, VWAP is 280. We were rejected at VWAP before. How can I play? If I play it, I have to go half size because it is anti-price trend right now. We have a little bit. We're seeing wicks in this zone. Is anyone going long here? Is anyone on the same page that I am looking for a long, perhaps literally just playing the bounce off the gap fill? Is anyone looking at that? If you rewind to the start of the show before the market opened, I explained my favorite trade would be we get the downside gap fill, we create a foundation, and I play the recovery off of it. Well, we've gotten the downside gap fill, and now we're in stage 2, wondering, are we actually making a foundation? I would go if I didn't blow my account. Yeah, I'm sorry for that. Yes, if we hit 220 on QQQ, well, QQQ, NQ, NDX are all the same. Only long above VWAP for me. I don't like that as a filter. I see that more so on social media right now. If I only go long above VWAP and I only go short below VWAP, I've looked at all my trading strategies and I've added that on as a filter, and it's not better. So maybe, I'm not saying it doesn't exist. Maybe there are systems in the world that perform better if you are distinctly on one side of VWAP or the other. But conceptually, it doesn't make sense to me. And I have not found actual evidence of it. Remember what VWAP is. That's a volume weighted average price. So that means if you're long above it, you're getting a long that's on average a worse fill than other people. If you are short below it, you are on average getting a short that is worse than other market participants. Like if you are only long above VWAP and short below VWAP, by definition, you are getting fills that are worse off than the average market trader. Like think about what VWAP actually means. The volume weighted average price. It's all of the trades at all of the prices. You average it out and you get an idea of where the average trade was executed. If you are long above the average trade, you are worse than the average trade. If you are short below the average trade, you are worse than the average trade. So, I mean, a lot of people in like actual Wall Street, actual hedge fund land, they actually get measured of how they performed against VWAP, as in, is your fill long below VWAP? Because that means you're better than the average participant. If you're short, is your fill above VWAP? Are you better than the average participant? I understand that a lot of people want to use VWAP as a measuring stick, and I do that myself. But this idea of I'm only long above VWAP, I'm only short below VWAP, actually, you just said it, sounds like chasing. It is a form of chasing. Now, I don't want you guys to be like, oh, I only go long below, I only go short above. No, that's not it. But I'm just saying sometimes there's a very good play where things are setting up for bounce and you use VWAP as your exit because it gets rejected there. So you want to play that recovery bounce, or maybe you're short above and your target is VWAP. So I feel like if you're always just like 100% tied to that being your buffer, and you're like, no, I can only be long above and I can only be short below. Anecdotally, I've never experienced it. My research has suggested that that's not a good way to look at it. And also, when you take a step back and think about conceptually what you're saying, it doesn't make sense to me. Now, with all of that being said, I am not the person telling you that, no, it is impossible for there to be a strategy that is long and better above VWAP or short and better below VWAP. It probably does exist, but I'm saying that as a very important exception to the generic rule, that it kind of just doesn't make sense. I actually think that it's more useful to look at the trend of VWAP and the relationship between session VWAP and RTH VWAP. Depends what time frame you're looking at. Not really. VWAP is the same on all time frames. The only difference in VWAP is the time at which you started. Did you start it at the start of the day, the start of the session, the start of the week, the start of the month, the start of the quarter? But if you have that VWAP anchored to the same starting point, it's going to be the same value on the 1 minute, the 5 minute, the 10 minute, the 30 minute. Time frame doesn't change it. The only thing that changes in VWAP, the only thing you can change in VWAP is the time at which you start measuring and like collecting and measuring the data. Did you start it at the beginning of the day, the beginning of the session, the beginning of the week, the beginning of the month, from the high point of the day, from the low point of the day, from midnight? That's the only thing that you can change. So no, time frame doesn't matter because VWAP is VWAP. It's just data collected from point X, and point X is a certain point in time. If that's set up, it's profitable, can't argue, but not my thing either. I like it. Like I said, like when I say things, it's tough because there's the only point of actual truth that there's not an outlier for in the world of trading is you have to respect your risk. Outside of that, you're always going to find exceptions and counterexamples. So I could give you a general thing, as in most of the time, I think only being bullish above VWAP and only being bearish below VWAP is not a smart idea. That's a general statement, but once again, you can find a singular counterexample. You can find outliers to that statement. If that is a setup and it's profitable, can't argue. Yeah, no, I agree. If you're doing that and you're profitable, don't let me get in your way, but maybe it's worthwhile to backtest. What if you do it without the VWAP filter, and all of a sudden, what if your system improves? I think a lot of people, unfortunately, they see a singular thing on social media, and I know where you're getting this from because I see it on social media as well, of like, hey, I'm sticking to my rules, and this is my filter, only bullish above and only bearish below. But my question is why? My question is did you actually backtest it, and does that filter actually make you more profitable? Or are you just using it as a filter because you saw someone on social media said that they use it as a filter, and for them it works, and like all of a sudden you're just implementing a new rule in your trading system that you haven't backtested, and you actually don't know, does it positively impact your system or does it negatively impact your system? A lot of the times when you add a new filter to a mechanical trading system, all it does is get rid of trades for no reason, and you still have the same expectation, you just are doing it on less trades. America loves VWAP. Asia loves iClouds. Yeah, maybe. You never go long above VWAP all the time. However, the risk today is going down below currently is high. Yeah, but the fact that it's changing means that's not a good filter. The risk right now, I think the risk is being bearish right now because we've already moved a decent chunk to the downside. We've come to a region of support, and if this sell program stops, we could be looking to pop. So I actually think the risk, like for a new trade at this moment in time, the risk is greater to be a bear at 10:26 this morning than it is to be a bull. Just because if you're a bull and you make a new low, okay, you have a small hit. You're just risking the intraday low. If you're bearish, where is your risk? Are you using VWAP? Are you using the resistance at 713? Are you using the intraday high? So I kind of I suppose you and I look at risk differently. When I think of risk, I think to myself, if I had to be a bull or if I had to be a bear, where would I anchor my risk point? If I was bullish right now at 243, my risk would be 209. I'd be risking 30 points. Not the best, not the worst. If I was bearish and I threw in the trade right now, my risk at minimum is 285. So I'm risking 45 points. There's not a bad argument that you should be risking 323. So you're risking 90 points. And for those of you with larger time frames, you're probably up in the region of either 380 or 415 for the bear side. So in terms of like, what is your risk if you're wrong? I think the risk is greater for bears. But you might be taking the argument of, yes, the risk is greater, but the momentum is currently down. So even though the risk is greater, my odds of being right are better. Maybe it's true. Maybe it's not true. I would say that the right move is actually no trade, because we're still waiting to see. Look at, like, I cannot express this enough. I know things look bearish right now, but I'll be the crazy person to say it. You have negative gamma above and positive gamma below. Positive gamma is sticky price action. As we continue to sell into this, market makers are going to be natural buyers. From here, we rip through this first region of negative gamma. From here on out, it is more difficult to push the market lower, because you're going to have market makers who are hedging out their books being natural buyers. We have natural support in this purple area. If in the event we start to pop, market makers are going to keep buying, and they're going to help us push it through this negative gamma area. So once again, from a risk reward perspective, it could keep going down. I fully admit 1 minute, 5 minute, 10 minute, it is all bearish. 30 minute is testing. Looking at NQ, 1 minute, 5 minute, 10 minute, it's all bearish. 30 minutes testing. Price momentum is to the downside. It's probably because we got pushed through this negative gamma, and we have this giant sell program that is still playing out. You can see the second it started, someone turned like this on at 9:48 this morning, and it is running it has not stopped. But my question is when this sell program is done, someone is selling calls, buying puts, when the delta stops dropping, and we are actually in this positive gamma zone with negative gamma above, feels to me that the smarter play, the less risky way, is to say, okay, can I get in on a good bullish entry signal and just hope that you pick the bottom properly with minimal support, and maybe you get lucky enough that it actually goes through this whole negative gamma zone. So I get sometimes that you just focus on the direction that we are going. But remember, sometimes like a rubber band, you go so much in one direction that it's almost reasonable to do that at like a portion of the movement. But at a certain point, the market gets exhausted. The sell program stops. Market makers have to step in and hedge their books differently. So chasing at certain price movements, it is a different thing. All of a sudden, if you're moving multiple of an ATR to the downside, the chance of a reversal is actually higher. Oddly enough, to the upside, the math gets skewed. The math is funny when it comes to the market, where they're not always inversely true. There's actually kind of well popularized by Larry William. Ooh, something just hit the market. Something. True Social. All right, and now we have news. Lake America 20. Does anyone, something just hit the market, and it hit it pretty brutally. Does anyone know what just happened? I'm not seeing a True Social update. Here we go. I have just been informed by the U.S. Navy that all mines have been removed and or detonated from within the international waters of the Strait. Iran has been notified that any ship or boat placing new mines will be immediately and systematically destroyed. Through Space Force, we are watching every square inch of the Strait, as we are also with Pickaxe Mountain, and have already destroyed 3 other nuclear sites. There is zero tolerance policy on mine placement in full force and effect. Thank you for your attention on this matter. So the fact that all the mines have been removed, and the threat of us destroying you systematically, apparently, if you place new, that was what just caused that wick. And I wonder if that was enough to flush everything out. I wonder if that wick lower is all she wrote. That was a big wick too. I mean, a big wick from 205 down to 140. The book is very thin today. For us to move that much, that quickly, the book must be extra. That we might have just saw the low get put in. I'd be very, very interested if the program just stopped right there and did everything it needed to do. I mean, we ran, look at that. I wonder if it was able to use that 40. how much am I willing to risk on this? It might be a little bit of a breakout here. 1 minute. That's not the worst trade I've ever seen. It's not the worst trade. If I do it, it would be half size. Maybe even less. I love when someone is wrong and they blame the news. I don't think I'm wrong. That's the issue. I do not think I am wrong. Well, I know I'm not wrong because what I'm saying is basically all the things of what I'm considering of why I'm not chasing to the downside. I don't want to chase it from the movement of negative to positive gamma. That's silly. I don't want to chase it when we're running into technical support. What I'm saying in the reasoning of risk reward paradigm are all the things that I'm considering. And it's basically saying why I would rather be bullish. Now, have I entered a bullish position? No. So I'm also not wrong by that measure, if that's what you're trying to point out. So objectively, you're not right because of a random being on the right or the wrong side of a random Trump update doesn't make you right or wrong in terms of your trade thesis unless you have insider information. It might make you right or wrong in terms of did your account go green or red, but that's not a trade. Like, it's not predictable unless you have obviously the truth API bullshit. But making money or losing money off of a random breaking piece of news, it's either you got lucky or you got unlucky. That's not a trading system. And it's only a trading system if you spend $100,000 a month on True Social, on the Truth API. But I do want to bring to your attention that a lot of that selling got very absorbed. You can see right here, huge amounts of selling. Book was very thin and it popped anyway. That's a lot of selling. It might have been selling to open, might have been selling to close. We don't know. But if it was selling to open, if people got knocked into this position to chase it, they're now trapped unless we actually crack 200. Do you know anyone who bought the True Social? Not a retail trader that I'm knowledgeable of, but I bet many hedge funds have. I mean, they're going to make $100,000 back in like the first piece of market moving news. So as much as that's extraordinarily expensive to a retail trader, and it is, to hedge funds, it's really not that expensive. They're spending $1.2 million a year, and they could probably make $1.2 million off like their first trade if executed properly. I wish I had a trail on that short wick. I'm actually, if this can get back above, I don't mind it. I've only taken that one trade today, oddly enough. If, like I said before, where if I hold it, maybe I would make more money. My trade was way higher. And if I held it to that point, I would have made a shitload of money. I mean, where was my first trade? Where my trade was, I was short at 253 and it went all the way down to 145. So I would have been up just over 100 points. But remember, that wasn't what I was trying to do. I was trying to play the rejection at VWAP down for the downside gap fill, got the gap fill. This is a fluke thing at 1031. If you got caught up in it, I'm sorry. I hope it benefited you. If you were short and you had some crazy reach target, I hope you were able to lock in. If you were long and that blew you out, I'm sorry. It's brutal, but that's just part of this game. Sometimes there's just unpredictable shit. It happens. It happens. But I want to remind you, we wicked into positive gamma. We did wick into positive gamma, and now there's negative gamma above. Is this sell program done? I'm really just trying to be patient and wait for this fucking sell program to be over. 9:47. Is it an hour long? Do we have to wait till like 10:45? Oh, this is brutal. Ooh, 1 minute, 5 minute, 10 minute is all bearish. I like the life that that's showing. trading at 236. Is it a shoulder head shoulder? Gets interesting if we snap the neckline at 250. It gets interesting. But we need 250, 260. I'm a little afraid to execute this just because, like, is Trump's now thrown out multiple things today. Is he done? I'd rather not be in a trade when he's popping off on social media. So that is definitely something in the back of my mind of, like, do I think Trump is done with his hot fingers today?
Order filled.
All right, I'm long at a half size. I am long at 46. I'm looking for the VWAP test at 73-ish. And it's also the 1 minute 50 EMA. Depending on how you look at this, there's an argument that I'm early or late. I know some of you got in on this wick, just basically ripping it, and good for you. 37. I'm trying to think of where I want to put my risk. I want to see it break the 1 minute 50 EMA, which is at 61. I want to see it on the test of 73, 72. I think I might just go freebie play because, like, I am trying to catch a falling knife and I'd rather not lose money on it. So it's a freebie play. Half size. I'm not doing anything crazy. Half side, it's 5 MNQ. Full size being 1 full NQ, which is 10. But I'm just a little worried that what if it is just perfectly rejected? I mean, it could easily get rejected at VWAP. It could easily get rejected at the 1 minute 50 EMA. I'm betting on a breakout. Betting on it continuing in your favor at support or resistance. Basically, I'm bullish and we're now at resistance. I don't think that's necessarily a quality bet. Sometimes it happens, but I'm taking the bet and I can make it quality by just taking all risk off the table. If this truly reverses right now, if it goes up to VWAP, breaks and rips, cool. If it knocks me out, I mean, I just took it riskless. There is a chance it comes, dips, knocks me out, and then goes anyway. I could always re-enter. So we're going to see. It looks like it's about to knock me out. Maybe it will, maybe it won't. I hope it doesn't. We're going to see. If it can pop right here, I'll be golden. But for me, I'm fishing. It's a free trade. It's half size. We're not sweating
Order
it.
filled.
And I got knocked out. We weren't sweating it anyway because it was, like I said, a freebie trade. I put the stop in at break even. I knew we were coming up to resistance. Not only is it structural resistance, it's a EMA resistance. It's also VWAP. So wanted to take a stab at it just in case there was a large reversal. But it cost me nothing. Well, it cost me commission. So, and now I might have the opportunity to get in at a better fill. It's always important to remember, and I say this a lot, but I think this point is really important to drive home. You never know the next bar. I took a shot at it. The next bar could have been the way we had this red wick down. It could have popped and maybe Trump said something positive. It also could have been a red bar, and that's exactly what it was, and that's why I protected myself by putting my stop at break even. Hang on, I feel like I missed a message that you guys are talking about. I guess it's the market moves the way it moves regardless of news. Nope, that's 100% wrong. Clearly, news can have an impact. If you think that this drop was going to happen regardless of the True Social update, you're 100% wrong. If you think a stock was going to gap up or gap down after earnings, regardless of the fact that they had earnings, you're 100% wrong. If you believe news has no impact on the market, I'm really, really concerned of who taught you because you are 100% wrong. Clearly, like, You think it's random that at 8:30 when we get an inflation report, the market can go wild? You think it's random that at 2 p.m. on FOMC Wednesdays, the market goes wild? Who taught you that? That is like verifiably inaccurate. There is no person who knows about trading, profitable or not, that thinks news doesn't have an impact on the market. Very evidently, news can have an impact on the market. Like without a doubt, it can have an impact on the market. That's actually like kind of a fucking crazy statement if you actually believe it. I hope it's rage bait. I really do. I hope it's just top tier rage bait saying that news doesn't impact the market. But if you think that's just fucking crazy. To anyone who's new in here and maybe you're just trying to figure out trading, understand that news, and it happens very, very quickly because the market's extraordinarily efficient, has a gigantic impact on the market. All right. Well, I had a winning trade and a break-even trade, and now I'm waiting to see what the fuck is actually going on. It's maybe it stopped. I was going to say it's still trending down. Price is going down on the S&P 500. Options seemingly stopped at 10:30, started at 9:45, stopped at 10:30. This program seemed to be 45 minutes, and since then it's flat. Since then it is flat. Mag 7 sold off, kind of stopped at 10, kind of grinding down. The NASDAQ. What are we doing? I feel like I'm trying to catch a falling knife today. I just keep coming back to this setup right here. We're at a hedge wall at 60, positive gamma. There's positive gamma at 650. Oh, I don't know. We just touched off 200. That's not bad risk. Momentum is evidently down. Evidently down, but all that negative gamma's above. That still means you need a decent sized natural buyer to come into the market to push it through that. Is it going to crack? Support, support, support. All right. We're in a region of support. The question is it going to hold or not? Is it going to hold, or are we going to crack? And then at that point, we might be talking about 100 flat. Obviously, that wick low. So you're talking about 140 followed by 100 followed by 17 if it continues this trip southward. But it is in support. So maybe we bounce out of it. Tough call. NASDAQ, not really doing much. Mag 7 kind of grinding down. S&P 500 flattening out. So I keep coming back to the S&P 500 flattening out and the negative gamma above, positive gamma below. We have this previous close at 660. It did wick off the previous close. You have 52. Momentum is not looking good. That's pretty bearish on the 1 minute, on the 5 minute, the 10, the 30. Rejection. I'm also seeing we have some trapped sellers at 190. But does that really mean anything? We're having a real big issue at the value area low. We got clearly smacked at VWAP, smacked at the point of control. Someone tried to sell on the 1042 bar. Someone tried to sell. It didn't work out how they thought it would. Right here, right at the final wick. Half size now, long, risk to 190. I like that as a risk point. I do. And you're buying at support, and you're basically just saying, hey, I hope support holds. And you don't have to be right that often on that type of a setup, because if you're right, you might get to ride it all the way back. And if you're wrong, your risk is so small. So you're really just playing a super optimized, minimal risk, higher reward setup. It's just a question of, will the support hold?
Order filled.
I took a long position, and I'm just trying to play the bounce off support. That's it. If I am wrong, it's a minimal loss. If I am right, it's a big reward. I don't have to be right that often to be net profitable. Remember, you're in this game to be net profitable. As much as it's our goal to be profitable in every trade, you're never going to be able to achieve that. You're never going to be able to achieve that. We all want to do it, and it'd be nice if it happens, but as much as you might be chasing that perfection, probably not going to happen. And just to show it to you guys, I am long at 22, so improving my fill. I was long at 46, knocked out for break even. So basically, I had a short trade at 10.15, made me money, downside gap fill, minimal risk, playing the VWAP rejection right here at 10.11. Then I went into a long position on this breakout. It was a little bit chasey, and I also knew we were coming into resistance. Based on the news, I thought, oh, maybe there could be an overreaction, and we really just pop. Once again, looking for maybe a pop above VWAP, maybe a test of 85, something like that, which is why I quickly moved the stop to break even. The stop to break even was hit, so that's what happens when you chase. And I say chase, and I know I say to never chase. In that case, I thought it was reasonable based on the news, based on where VWAP was, and also based on the fact that I knew as soon as we were getting up to 60 or 70, I was moving the stop to break even. This particular play is a slightly different setup. It's now just, hey, we're at support. Maybe we bounce out of it. You don't always bounce out of support. Sometimes you're in support like we were, and it gets cracked. That is totally possible. There is no guarantee that we have to bounce here, which is exactly why I have my risk at the bottom of support. If the support cracks, I have to get out. Of course, there are fake out breakouts, or excuse me, in this case, a fake out breakdown. If it is a fake out breakdown, then I could always re-enter. But you never want to bet on it being a fake out, because think about what that means. That means if you dip below, you're like, no, I'm going to give it like some time. But what if it just keeps going? That's before you know it, you're getting completely blown out. So it's a dangerous thing to assume that when something is cracking one of your levels, it's very, very dangerous to assume that it's fake. Because if it just keeps going, like, what's your pain point? You have to like actually know when you're getting out. So all I'm trying to do right now is literally buy at this support. It is not looking the best at the moment. Maybe we bounce out of it. I need the crack above 246, or if we go up to 240, 245, like right here, this next region, obviously I'm putting my stop to break even. But we're going to see how this is not looking the best for me. I see buyers are lining up at 204. It's not the end of it. One interesting thing about this play that I like is I do see some trap sellers. And I'm wondering if these trap sellers don't get what they want quickly at 1042 right here, trap sellers, if it goes, I wonder if they'll kind of be like, okay, I'm wrong, and help a push back up to 270. But we'll see. Just half size trade, reasonable risk, nothing too fancy. I'm just wondering if this selling has like just had enough selling and we get some sort of reversion. Definitely don't want to chase it to the downside because it is exactly that. It is chasing. I see the sell program in the S&P 500 for at least now has paused. It might be over. I don't know. I'll tell you better later. Mag 7 not looking the best. And it's just everything's flattening out. So I'm wondering if I just now have, like, I'm wondering if we see so much seller exhaustion that it's now time for a retest of even RTH VWAP. Where's RTH VWAP? RTH VWAP is up here at 292. Like, maybe I can somehow snag something between 270 and 312, something like that. And we'll see how it goes. And like I said, I'm once again going to have to put my stop to break even because it could easily be rejected by the 1 minute 50 EMA. So as soon as we exceed this 246, 250 level, maybe even 260, I need to put the stop to break even because I am fighting trend. You have to admit to yourself when you're fighting trend. And just because you're fighting trend doesn't mean you're wrong. It means like just maybe consider your risk because maybe, just maybe, you're not right about the trend reversal. I was not right about the trend reversal at 1039, so I protected myself. I gave myself a fighting shot. If it wants to go, it wants to go. I do want to move this up to 309, and we'll go from there. Free trade. We're fishing for the second time today. I have one winning trade. I have one losing trade. Actually, we're going to move this up to 24 to pay for itself. And we'll see how it goes. Look at rum. Dude, rum. I'm telling you guys, rum, I kind of feel like I started the whole vibe with rum. It's ripping. Yeah, I know. That's the alerts in the background that were going off were rum related. You can see all my alerts that I have on rum. Rum right here. I feel like I was the major person to call this one out. Not that one. 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 I wanted it. Where was my breakdown with Allbird? Was it in May? Bird. Fuck. What is this search algorithm? I can't find my own fucking tweets about this. Lots of media. Is it not media? Is it photos? That's probably why. Photos. I'm gonna find you. At this point, now I just need to prove it to myself that I did it. Here it is. So if you want to read my whole write-up on rum, it was posted on April 15th at 8:07 p.m. April 15th. It's on my Twitter page. But I was basically explaining why I believed rum was one of the most interesting undervalued AI plays. And it was all because of their Northern Data play, which is now Quake AI. And I said that on April 15th. Where were we on April, May 15th? I publicly shared all of this, and we were trading at the closing value on that day was $5.58. So I would say that, yeah, I was very, very right because it's up almost 100% since my call out, and there's your exact timestamp of it. Okay. Did I get the breakout? Maybe yes, maybe no. It's seemingly running into another wall right at that 50 EMA. It didn't quite get VWAP. And just because I know I'm fighting trend, that's why I put my stop to break even. Maybe I get lucky. Maybe this is the time resistance actually breaks. But just in case I flip the quarter wrong, it's a heads or tails game. Just in case I'm wrong, like I was already today, I protected myself. I put my stop at break even. I will look for you. I will find you, and I will trade you. I would love for this breakout to go. I'm long at 23 or something, and I am watching to see this VWAP test. I want to see the VWAP test at 270. In order, I care about the region of 270, the region of 290, and the region of 312. Or you could say Matt cares about the region between 270 and 312. Like, I care about that 40-point zone. Do we get above it and hold, or do we get rejected within it? And I wouldn't mind taking my profits at the top of that zone, but the way this is going, if it gets smacked again here for the 10th time today, it'll probably maybe just knocks me out for break even. Is it going to knock me out? You going to do this to me, dog? Really? After all we've been through? After all we've been through? On the day of my daughter's what? Am I going to get saved? My stop is 24. It got to 24.50. How lucky am I? How lucky can one guy possibly be? How lucky can one guy possibly be?
Order filled.
Apparently not that lucky. Gave it a shot. It came up to resistance. It didn't go. It came up to resistance, just did not go. So I protected myself. Don't mind it. That's what trading is. That's what trading is. I was trying to get the breakout. The breakout has just been rejected. You can't cry about it. And knowing my luck on that particular setup, that might be just the higher low, and it goes from here, and we're going to see. We're going to see. Yeah, it came right into resistance and got rejected. You can't really cry. That's what resistance does. That's the way we bounce out of support. That's what support does. Once in a while, you crack these levels, but kind of rare to do it on your first attempt. You kissed her and she slapped you. It happens. It happens to the best of us. Happens to the best of us, which is why I believe you want to trade in a defensive manner. Exactly why you want to maybe size down. I've been trading at half size. I put my stop and break even. So I have one winning trade and 2 break even trades on the day. It's life, folks. That's life. SPX is testing. NQ kind of testing. Rum is ripping like no other. AMD is actually having a decent day as well. MU. Wouldn't mind a dip to 200, but it might not happen. 1 minute is trying to push on ES and on NQ as we speak. Might be a real breakout, might not. We might be seeing a shift in trend. We've gone from bearish to maybe bullish. We've seen this play out over the past 2 days. If you don't believe me, go look at the chart for the past 2 days. This is what happened yesterday. Sell off, pop, higher low, picks up at 1120. Has a pretty solid push to 1220. Look at Friday of last week. We sell off. We start to turn the corner at 10:30 and pops all the way to 11:50. So can you pop from here? On the 2 most recent trading days, that's kind of exactly what happened. Matt, are you playing NVIDIA's earnings? No, I think playing any earnings is kind of stupid. If you're going to play it, the math that's going to benefit you is selling premium. Most of them have over-exaggerated volatility, and a lot of the times the realized vol RV is lower than the implied vol. So the best way to play it is to sell premium. So there is profitable ways to play earnings, and that's the profitable way to play earnings. Just randomly betting bullish or bearish, you're not going to, as a retail trader, with the information you have, the analysis you have, just like what you're afforded as a retail trader, you're not going to have an edge playing earnings. That doesn't mean you can't get lucky. Hey, have at it. If you want to get lucky, like, I wish you the best of luck. I hope you do crush it. But understand that Wall Street is very good at picking its expectations. So to magically beat or miss on all these already hyper advanced models, it's more luck than something else. Where the real math edge is, where the real possibility is for you, is to sell premium outside the expected move. For example, NVIDIA has an expected move just above 5%. So if you are bullish on NVIDIA, what you would want to do is sell puts just below that 5% mark. And opposite, if you're bearish, you can come up with your own thesis of bullish or bearish, but the best way to play it is to be selling premium outside of that expected move. Time and time again, research papers tell us that's the best way to engage with earnings. Rumble's crushing AMD. Rumble up another 9% today. This is just the market realizing it's a legit play. I'm here for it. Well, looks like my stop out at break even was once again the right move. We took a long, looked good, just didn't go through. I gave it a shot. I gave it the old college try. It just did not pay. It just did not Hey, so I'm currently flat. I had a winning trade, a break-even trade, and a break-even trade. I've traded 3 times today, and I would say that arguably I'm 1 for 1 because the other 2 were just break-even. So 1 winning trade. Do you think XRP hit a top? I think XRP is absolute trash, and every short or every pop is to be shorted. When does a short squeeze for rum kick in? That's not how short squeezes work. It's not like there's a specific level that like, oh, the short squeeze happens now. If that's how the market dynamics work, short squeeze plays would be a lot easier to play and identify and also create. It's just not how it works. Just not how it works. I was going to buy a bunch of rum after earnings, but didn't get the fill that I wanted. Coulda, shoulda, woulda. Coulda, shoulda, woulda. That's the story of trading. The story of trading. The old coulda, shoulda, woulda. Thought the massive wick would have bounced us. What a mental section. I mean, we did bounce. The low was 145. Right after that, we bounced up to 272. That's a 130-point bounce. So how much more range are you really looking for there? I mean, 130 points. If you caught that on one NQ, half an NQ, you're feeling good on the day. You made over $1,000. If you made over $1,000 already with this price action, dude, call it a day. Move on with your life. Actually, calling it a day, moving on with your life. This has rapidly become boring, so maybe returning in the afternoon session if something happens, but I don't want to get myself into a trade that I shouldn't be taking, so I got to know myself and call it a quits on the day before I let you guys go. Shout out to MFF. Use that code Goonie. You're going to get end of day drawdown on funded accounts, daily payouts, and 90-10 split. This is the only firm I know of that has that whole combination of 3. You could get the best deal, the most money off by using that code Goonie. Shout out to MFF. Pinned at the top of chat in the description of the video. If you guys like it enough, if there's enough signups this week, they will be sponsoring the Payday Friday this Friday and giving away even more accounts to you guys. So just wanted to share that. Overall, the market, it sold off. We had a giant sell program, a gigantic sell program, selling, then just going flat. So the sell program stopped. Buyers did not step in yet. Mag 7 is still getting hit. NASDAQ is actually still getting hit. 1 minute, 5 minute, 10 minute momentum is bearish. 30 minute, it's below its cloud, but the cloud is green. Same thing on the NQ. 1 minute, 5 minute, 10 minute is all bearish. 30 minute, if it can recover, this might just be that V-shaped bounce. It could be a V-shaped bounce, but that's a big if. We have to wait to see if that actually happens. I would love to see it above 65, 66 here. Maybe we're putting in a higher low on SPX. We're in this zone of support again. Yes, it could crack. If it does crack, I'd be looking at 140 followed by 100. Those would be my targets in order. However, it's support, so you don't go short here. If you wanted to short, you were shorting back up here at 1053, 1054. Short at resistance if you're bearish. Long at support if you're bullish. Don't chase a short at support. Don't chase a long at resistance. You're just skewing your risk reward in a way that eventually you're going to get clocked and you are not going to enjoy the experience. So that's what I have for you. By the way, rum absolutely ripping. So congrats if you're on the train with me riding the rum rocket higher and higher and higher. Once again, shout out to MFF. Use that code Goonie, and obviously code Goonie will work on TPT, Tradeify. It's going to work on most of the legit firms. So whichever one you like for your trading strategy, use that code Goonie if you want to support me and the team that makes this show possible. Other than that, I appreciate all the good vibes today. I appreciate all the good conversation today. Be careful out there. Not necessarily the worst, but also not necessarily the best trading environment. So please be careful. Other than that, that's what I have for you on the day. We'll be posting content later on today and then streaming once again tomorrow morning. I hope to see you there. Don't forget tomorrow, PCE, GDP, all coming out an hour before the market opens. After the market closes tomorrow, you have NVIDIA, CrowdStrike, and Salesforce. And after the market closes today, you have Zoom. And then just so you know, fast forwarding to Friday morning, that's when Kevin Warsh will be speaking at the Jackson Hole Symposium. So just wanted to put all of that on your radar for whatever maybe swing positions or stuff that you have actively on the market. I wish you best of luck with the rest of the day. I'll catch you guys later. Peace.
Bye.